One of the most profitable car companies in the world is one you've probably never heard of, Stellantis. Stellantis is the parent company to car brands such as Chrysler, Fiat, Jeep, Dodge, and Citroën. And last week, it reported blowout earnings. Revenue came in at $191 billion, up 18% on the year. It had earnings per share of $2.78 versus $2.67 expected. And it also posted impressive operating margins of 13% for 2022. For General Motors, that number was 11%, and for Ford, 7%. And finally, Stellantis is emerging as a premier electric vehicle company. The company delivered 288,000 EVs last year, up 41% from 2021. That makes it the second largest EV seller in Europe, behind Volkswagen, but ahead of Tesla. What do you think of this?
Well, first, I want to do a survey with you and Claire. Do either of you own a car?
No.
You don't own a car. Do you own one, Claire?
No.
No car. So how do you get around?
Subway.
Subway.
Oh, wow. That makes sense.
Actually, City Bike as well. It's my.
And do you ever take
favorite.
Ubers?
Yeah, sometimes.
And had either of you ever heard of a company called Stellantis?
Never.
No. I only kind of realized what it was when I heard that they make Jeep. That's when I started caring.
I didn't. I literally had never heard the term Stellantis before, and it made me feel really out of it. And then someone said, "Oh, it's the Chrysler Fiat brand." But 191 billion in revenues, up 18%, 18 billion in net profit, 12 billion in free cash flow, up 78%, and 5 confirmed locations for new gigafactories and plans to build a fast charging network in Europe. So this is really interesting. And then if you look at the PE on it, these PEs are just so slow. Stellantis has a 3.3 price earnings ratio. It feels like Chrysler Fiat isn't known for being very innovative, and they're paying a big price here. Their enterprise value to EBITDA is only 1.3 versus BMW at 6, VW at 3.5. And my guess is, I don't know, what is Tesla, like 3 million or something? I mean,
Yeah,
30 or 40. So I had never heard this. The metaphor is for EVs is they're following the same arc as streaming. And that is media companies were so focused on maintaining the legacy assets, couldn't get out of their own way. And Netflix just came in and said, we can raise cheap capital, we can lose money, we can overinvest in content at a great value. And they basically had the playing field to themselves for the better part of a decade. And then finally, the content guys said, okay, we have to get into this business. We have to do it well. We have to make the requisite investments. You know, shareholders hold your nose. Here we go. And Netflix stock peak to trough was cut 75%. And now Netflix has all sorts of viable competitors. I think the same thing is playing out in EVs. And that is none of the traditional automakers wanted to make the requisite investments. All of their factories were optimized for internal combustion engines. They didn't know anything about producing EVs. They probably thought, you know, they'd heard all the scare tactics around internal combustion engines going away and never believed it and wanted to think that big Suburbans were going to be selling forever. And then, boom, Tesla comes along, is able to attract incredibly cheap capital, pulls away from anyone else, and is now worth more than, you know, the entire U.S. and German auto industry. And they said about 3 or 4 years ago, and I think there's a real lag, they started getting really serious. What's interesting is Jason pointed out, these guys have been making EVs for the better part of, you know, a decade plus. They've just been shitty EVs. And now they have a good one. But what are you seeing? This is kind of like Disney Plus, right? This is HBO Max, whatever, you know, the new entrants. I guess HBO is not a new entrance, but all of a sudden there's viable competitors to Netflix. And I think that means, and again, this is my Waterloo, I will die on this hill. I think Tesla's going to follow the same arc as Netflix in terms of its stock.
Yeah. Yeah. I mean, so the first EV, or one of the first EVs, in 1996, GM created the EV1. No one bought them, and they stopped building them in 1999. And I think the comparison that you're making is that, like, you know, Stellantis is the combination of Chrysler and Fiat. They merged a few years ago, and then they rebranded to Stellantis. And the idea here is that this is sort of a legacy entrant like an HBO that is finally getting involved in this space. And the only thing that could happen now is that Tesla's market share is going to decline. And what we saw with Netflix, so in 2007, Netflix had a 91% market share on all over-the-top streaming media. And then by 2019, the market share was down to 19%. So with Tesla, its US market share was 80% in 2020. And then in 2022, it's down to 65%. And I guess your point is the only thing that could happen is that keeps on going down as all of these legacy companies start to pile in.
Yeah, the question is, will the growth of the market supersede Tesla's loss of share to competition?
Right.
And I think Tesla's stock is so priced to perfection that when it experiences the kind of competition they're experiencing, I think the market's just going to start looking for reasons for why this thing shouldn't be valued as much as in the entire German and U.S. auto industries.
Mm-hmm.
Their deliveries increased 21% year on year. That's Tesla. But GM's EV deliveries increased 57%, Ford 126%, VW 26%. These are sort of misleading numbers because I bet it's off a much smaller base. But this is finally, and this is good for the world. And also, to be fair, Elon Musk deserves a lot of credit here for sort of inspiring and catalyzing the race to EV. It just wouldn't have happened. It would have happened. It wouldn't have happened as aggressively and as quickly as it is now because he did such an amazing job with Tesla.
I want to circle back to this idea of the Stellantis brand, which I had never heard of, Claire had never heard of, and you had never heard of. And I'm looking at these price to earnings ratios that you mentioned. Stellantis is at 3.3, price to earnings. Ford 5.2, GM 6.7. Do you think it's possible that the disparity in those multiples is a product of the fact that people don't know what this company is? I mean, is that a thing where a corporation's brand isn't known enough to investors, and as a result, they just don't pay enough attention, they don't buy?
I made my living until I was in my 40s based on one thing, and that is brand equity translates to irrational margins and above market stakeholder return. And it all comes down to this. You're in a bar, you see someone you're attracted to, she asks you what car you have. You can either have a Tesla Model 3, or you can have a Stellantis, which is a slightly better car at a slightly lower price. Which car are you more excited to tell this potential mate about?
The Tesla.
Yeah, and look, the reason I bought a Tesla is I want to signal to friends and people that I care about the world and I'm rich. That's a subtle way of saying I'm in a midlife crisis. And these brands are every day. Show me any high margin product. I'm going to show you something that either makes you feel closer to God, makes you feel like a better parent, or makes you feel more attractive to potential mates. And Tesla is an amazing self-expressive benefit brand. Stellantis, what the fuck is Stellantis? And Claire just mentioned probably the best brand in the Stellantis portfolio, Jeep, which has always maintained kind of an American gritty, tough feel to it. But this is a weak brand. Now, having said that, this feels like a buy to me. But nothing pays. The world's wealthiest man. It's not Elon Musk. It isn't Warren Buffett. It's a guy who figured out that if you can figure out a way to reinforce brand equity such that when someone carries a product, it signals to the world that they are a superior form of this species. Their cheekbones are higher. They're wealthy. They appreciate art. They're good storytellers. Boom. That's LVMH. And this guy, Bernard Arnault, has known that for decades, and through savvy deal making, has become the wealthiest man in the world. So brand equity, show me irrational margins on any consumer product, I'm going to show you a great brand.